I have wild ranges here of expectations of oil.
Yeah.
This is as of yesterday. There are people expecting, or not expecting, but saying it could get up to $200 a barrel if the conflict doesn't get over. And I have some that are saying that we're going to cool off and it's going to all work out. And it's going to go down to $50 a barrel by the end of the year. That is a wild difference in forecast.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt here with Isaac.
Morning.
And John.
Good morning.
And we're ready to roll this morning.
Yeah.
I'm coming in hot off of a week vacation. A lot of flight delays.
Yeah, you were
Got in
gone
late last night. So
to the East Coast.
yeah, if I
Lobster
kind
Fest.
of like start dozing off halfway through this, then
What time did you get in last night?
we got to the house about 10.
Okay.
But we were supposed to get to the house Sunday about 3. So
Tomorrow.
So just a-
yeah.
that
day and a half
that
more.
like little 24 plus hour stretch though, when you're ready to be home and you thought you were going to be home, feels
Yeah.
like 4 days.
Yeah.
You know.
Yeah, that's brutal.
But it was a good time.
Good.
Good time to get away. All right, got a couple good topics to talk through. The first one, we've talked about this a lot. It was kind of everything. It was like the only thing anyone was talking about for a while. But the SpaceX IPO, kind of the round trip we've seen with the stock since the IPO. You know, this is something we talked about. We threw up some charts a few weeks back before the IPO talking about, historically what happens to IPOs, right? A lot of times you see this short-term pop. A lot of times you see them give it all up, if not more than all of it up, and there's an opportunity to maybe buy it even below the IPO price. And how this trend is just a very historically normal kind of thing with these IPOs. And this one has proven so far. I mean, we're what day did it IPO? June 10th. So we're 5 weeks in, and so far it's proven to be the same, right? SpaceX IPO at 135 today. It is up at the open, but it's trading at 122.
Mm-hmm. And this is still most pre-IPO haven't sold anything.
Yeah.
So like what happens when the employees are able to actually sell?
Yeah,
It's
this
been
is
interesting
before,
to watch. This is before the biggest shareholders can actually even sell.
There's a lot, there's a lot of new stock coming into the market. Right, they're coming out in like tranches.
Yep.
And I forget the exact schedule and how it all works.
I'm trying to read it right now. It's confusing.
Yeah, but there's a lot more SpaceX stock coming into the market. Right, the indexes are going to start buying it up. So like, how does that offset the new shares that'll be coming into the market? Is that enough to kind of hold the price up, or is the demand enough?
Well, how many calls did we have before it IPO'd of people wanting it? Like so many,
Yeah,
right?
yeah, a
Quite a
lot.
few.
And how many did we actually buy? Very, very few, right?
Handful.
Very few got in, and mostly due to the fact that we kind of cautioned people of this
Yeah.
phenomenon of the stock goes up and then it falls back down and then it trenches along, and then if it's a good stock, it will go back up eventually over time, right? I love the future of SpaceX. I think it's great, but if you're one of those people out there that felt like you missed out on the IPO price, I mean,
You're getting it at a 10%
better.
discount.
Yeah,
Come
you're
on.
getting it better than everybody else that got it
Yeah.
at the IPO price. So, I mean, what a time to invest if you were optimistic about it. What does 1 month of trading change your optimism? Of
And
this
it
company,
shouldn't.
right?
Yeah. If you bought it at 200 even, I mean, because there are people that did.
Oh yeah.
It's like, well, it's the same company that you bought it at 200.
Yeah.
Right. Like, I think 10 years from now, this whole world's going to look different. So it'll be interesting to see.
I think so
I
too.
guess.
I have faith that what they're doing is incredible, and even if I don't understand it fully, but I do understand all the satellites and around the Earth that have created great opportunities for the Sahara Desert to get internet usage and so on. It's like weird, crazy stuff, and this all stems from Elon Musk's brain and SpaceX and so on. So
Do you think some of the sell-off has been, people tried to buy it early for a quick run up, and then that happened. That happened, and then they started selling. Or the only reason I would say, kind of counter my own point, would be it just happened so quick. Like it went up for like 3 or 4 days, like 20% a day.
Yeah.
But then it's been falling ever since.
The rules on the IPO, this was interesting. The rules on the IPO allowed the pre-IPO owners outs, but not for very much. But they could take, I think it was up to 25% out if it went up certain percent, which it did go up. The percent it hit that level. So I think you could have some selling of people like employees and so on that were able to get some out that, and that sounds silly, but to help them with their life, pay off bills, whatever. Because we're talking about,
well, some of the custodians,
companies.
we're multi-custodial, right? We can hold out client assets at different places. And essentially all of the custodians that we were looking at, buying SpaceX through, that had shares that like pre-IPO shares where you could get in at 135 before it started trading, all said, hey, you can sell as soon as this, but if you do, we might limit your future IPO access.
Yeah. You had to hold it for 31 days was the rule on that.
Right.
But some people, if they got it at 135, it got to 200 and something, and they don't care about it. They just wanted the quick profit.
Yeah.
So, I mean, there's quick profit taking. There's employees that probably needed the money.
For sure.
For just regular life, and they took it out.
So
for
here's
that.
a
lot of selling for that reason, I would guess.
So no stock advice being given here, but just kind of if you had to place a bet, at the end of the year, where is SpaceX trading?
If I had to make a bet, because we're going to be past,
December.
Yeah, I mean, there's going to be some more selling, I would think, in like
180 days. Post IPO is December 8th.
Okay, so end of year, I would say that it may be, because I think this price is like going to create some buying opportunities for institutional investors and so on. I think that you can get it below IPO, so you might have a little run up and then a little run down, little back and forth. I'm going to guess it's going to be higher than this at the end of the year.
Isaac,
I think lower than this by the end of the year.
I'm gonna put a price of $85 on it.
Wow.
At the end of the year.
I hope you're right, because I would love to own some at $85.
Yeah, I had a conversation with somebody that his want for purchasing it was it's going to, or Starlink is going to put Verizon and AT&T out of business.
Yeah.
And then I was like, well, both of their market caps combined are 20% of SpaceX or something crazy, So it's like, that's really not where the value is there, right?
Yeah.
Like we need SpaceX to literally
take over the world,
take over a different planet.
Yeah,
which is what they're trying to do. So, I think,
I think there's too much right now. The market's in a tough spot with everything going on, at or near all-time highs. Tech's, been struggling, big cap tech. And with this, all these new shares coming in the market, I just don't think the market's going to have the appetite, even with the indexes buying it. I don't think the market's going to have the appetite to be able to keep the price up. So I think it's going to end up lower by the end of the year. So, anyways, for what it's worth,
let's keep track of that. I mean, it's 122 today, 123 today. I mean, it's just it was
fun to watch.
Wildly talked about highest IPO in the history of our universe ever.
The thing is,
it'd be fun to see how
$85 a share.
Yeah,
it's still valued at over $1 trillion.
I know, it's crazy.
Or like right around $1 trillion.
Yeah, it's still overpriced.
It's not like that's
actually
me saying,
yeah,
I don't think the company's worth anything.
Yeah,
I mean, it's still one of the biggest companies.
Oh yeah,
in the world
at
that level.
It's fun to kind of. It's fun to speculate. We'll see what happens.
All right, so talking about stocks, which stocks will win AI? Will win the AI trade moving forward. So up until now, you've had the Microns, the Nvidias. It's really been kind of more of the picks and shovels cycle for AI, right? The people building out the AI infrastructure, the data warehouses, the open AIs. I mean, some of these are private companies, but those have been the winners of the AI trade and the opportunity thus far. What we've started to see, in my opinion, and I think the market is showing us, not that this is all that insightful, but is that the market's starting to shift from that, right? And they're saying, hey, we're not going to pay the same multiple for NVIDIA. NVIDIA has continued to do really, really well, but people aren't paying the same multiple, right? NVIDIA is trading at below S&P 500 multiple levels. So people aren't rewarding NVIDIA in the same way that they were. And that's just one example, but you can kind of go down the list. And so we're starting to see, I think, the very, very early stages of people that are going to win and the stocks that are going to do well because of AI moving forward aren't going to be the picks and shovels of AI. They're going to be the implementers. They're going to be the people, the companies that are using AI, have learned how to use AI to increase margin, to increase productivity, to be able to continue to grow, but maybe do it with fewer people, not have to hire as many people, right? And so, right before we jumped on here, I was talking about Travelers. Travelers is an insurance company who's done, I don't know what they're up year to date. It's nothing like crazy.
It was 40.
But yeah, I mean, it's solid, well above what the market overall has done. And Travelers is kind of this old school, been around since the beginning of time, insurance company. And in their latest earnings calls and some of their stuff, they've been talking a lot about AI and how they're using AI for their insurance underwriting and how they're getting quicker and they're winning business and they're getting leaner because of AI. And the stock has rewarded. The stock has been rewarded for that. And so, one small example of a company that I think has benefited and has done well because of AI. But I think that is just the beginning of the trend that we will continue to see moving forward.
I agree. So you're going to see companies that are going to, we always thought it was terrible when you had layoffs, right? Layoffs. But you're going to start seeing job reduction because of AI, which makes the company leaner.
Yeah.
And that company is going to have a higher potential for revenue because they have less cost.
Yeah.
So the purpose of that we're all excited about AI is actually work. Now, the negative is that you have people on the unemployment
When
line.
I think it's less about we'll definitely see some of that. But with your companies that are growing, it's just what can they keep the same growth without the growth in headcount? Like maybe they're having to lay people off, but if they've been able to grow revenue at 20% a year, 30% a year, year over year, but they've been having to grow headcount at 15, 20% a year, can they keep up the 20% growth with a 5% headcount growth? Right. And if so, the people that are able to figure that out, I mean, that's exactly what we're trying to do here at the firm. How do we continue to grow with the services that we offer, with who we can help, with what we can do for people? But we don't have to double the size of our team just because the firm doubles, right? And so the people that are able to figure that out are going to be huge winners in this
I agree.
over the next 5 to 10 years.
There was a report yesterday, and I can't remember the company, but they had laid off a substantial amount, and one of the reasons was they were able to replace the jobs. And I can't remember the name of the company, so I apologize for not having the actual data on that. I just was watching my business channel I have on, and that came on. Going back to your point of what stocks win, I still think that the big names like Micron and Intel and the ones that have gone up through the moon and just continue to rise and maybe beyond our belief of where they could go, I still think they have a lot of play in this. I think companies like Dell, who are in the internal infrastructure of AI, have room to grow. And I think anything to do with the energy infrastructure, but also the energy output, kind of not in the technology, but the energy side. And I'm kind of blowing what I'm trying to say, but there is so much expansion in that needed for this AI that I think there's a lot of areas to invest in.
Well, and it's so much more accessible than kind of I first thought it would be, right? Like you think when you hear it can have a reduction in headcount or a reduced hiring, you think, all right, well, Google is going to become more profitable. But really it's, and you see it in the small cap market, like these smaller companies, you can get on anywhere and add an AI tool for a couple $100 a month. And you don't think these local, not even public companies, but just even local mom and pop shops aren't getting more profitable. And then that money spills back into the economy. I think there's some legs for some of these smaller companies, and we're seeing a little bit of that.
I think with the infrastructure, just to push back on what you said, John, not saying I disagree with you, but I think so much of that has been pulled forward.
Overdone,
and I think that where I would disagree maybe slightly is the demand 100% is going to continue far into the future.
Yeah.
Or at least it appears that appears to be the case. I don't think that's going to lead to higher stock prices for those companies.
I'm going to say Dell is a great example. Dell Technologies, their infrastructure is GPU-rich infrastructure. It's not the typical infrastructure I'm talking about, the brick and mortar of building out.
Sure.
But I still think there's room for companies like Dell. Now look at their forward future earnings per share, all the stuff. They still have bright opportunities. Now it will fizzle out.
Sure.
It'll be
The
overdone.
demand's going to be there. It's just how much has been in the.
I know, how
for
much
the
is already
stock
built
has
in.
been pulled forward.
Actually quite a bit.
And
Yeah.
so I think they'll continue to grow, but you might see a little bit more volatility there just because so much of that has been pulled forward. So, a miss on earnings is going to be tough for them, right? If they
right.
have a bad quarter because
And
people
they have
pulled
high
that forward.
expectations.
I mean, Dell's up 225% in the last year.
I know, and their projected 1 year growth of 82%. I mean, it's hard to meet and match those.
Yeah.
Yeah. And so if they're up that much and they're only projected to be up 82% year over year, did they overshoot?
What's their stock going to do between now and
yeah.
then? Yeah. Well, I think the big, you've heard me talk about this podcast many times on here, but the Compound and Friends, listen to it every week. Josh Brown and Michael Batnick and those guys over at Ritholtz. Josh has been on this kick lately of, the big AI winners, Apple.
Mm-hmm.
Like, how are people going to access all of these AI tools? It's going to be on their phone.
Right.
It's going to be on the device that everyone in the world owns, some kind of Apple product.
Right.
And so how is Apple going to leverage, working with these different providers of AI to give everyone access to it? And because that's the distribution is going to be, distribution is so many times is almost always the issue, right?
Right.
It's like, how do you get it to the people? How do you get it to the end users? You can have a great product, but if you can't sell it or can't get it to who needs it, then so Apple solves that problem for all of these guys.
Yeah.
Like, if you can have a relationship with Apple, if you're OpenAI or Anthropic or Gemini or Claude or whoever it may be, that essentially solves that problem.
Yeah.
So Apple is in a really good spot.
Apple is, you're right. You have to go through Apple
because
to
they
get all
are
that.
the end user.
Yeah, you're right.
And so I think that's been a really interesting take to hear Josh Brown talk through. So go listen to their stuff. They've got a lot of good content. But yeah, I would agree with that generally. So last thing for today, gas prices up. So oil's up. Iran's kind of heating up again with everything going on over there. Oil had kind of bottomed or had dropped significantly back to somewhat kind of normal prices earlier in July, but then we've seen a pretty dramatic increase from here. There's an article on the Wall Street Journal that says, get ready for $120 oil if Hormuz stays shut. This is coming from Goldman Sachs. Article was written by Joe Wallace. Renewed closure of the Strait of Hormuz has pushed crude oil prices up 25% from their early July lows. Goldman says the benchmark Brent crude might exceed $120 a barrel in the fourth quarter and average $100 a barrel in 2027 if Hormuz stays shut much longer. 120 Brent would be just above an intraday high it hit in early March. So that would take us back to kind of the intraday high that we saw a couple months ago.
I have wild ranges here of expectations of oil.
Mm-hmm. Yeah.
This is as of yesterday. There are people expecting, or not expecting, but saying it could get up to $200 a barrel if the conflict doesn't get over. And I have some that are saying that we're going to cool off and it's going to all work out and it's going to go down to $50 a barrel by the end of the year. That is a wild difference in forecast. And I know Goldman Sachs right there was right in the middle of that range, right? And so, hey, one great thing coming out of this, and it is a great thing, is that the Arab nations other than Iran are finding other ways to get the oil out of their countries to the rest of the world rather than having to go through the Strait of Hormuz. The Saudis are putting billions and billions of dollars into new infrastructure going the other way, and they will obviously be able to make that happen, right? They're not going to
in time.
It might take years, but if you look at how they've gotten oil out of Saudi is a great example. They had going the other direction. They had a very small percentage of their oil before this conflict started.
Right.
And now they've been able to get oil going that other direction.
Well, them in Syria just renewed, said they were going to reopen a big pipeline that went through Syria to get it to the Mediterranean.
They're going to find
had been
ways.
shut down for a while or something.
Yeah, they're going to find, and that's one of the pieces. But they're going to find ways to. Number one, they're going to find ways to not have to rely on the Strait of Hormuz, and then number two, the war eventually will get over. I mean, this is, we have no idea, and I hate it for all the people going through it, and our military forces being at risk. It's a terrible time right now, but it will eventually be done. But in the meantime, they are finding alternatives. So yes, oil may be bad for 6 months to a year, but eventually it will be solved.
Yeah.
It stinks though for now.
Yeah. No, it's tough, and I think the longer it stays elevated, that is oil prices. That then we're back to the conversations with what's the Fed going to do? What does that do to inflation?
Mm-hmm.
That does complicate a lot of things. But I think it's a good wake up call for the Saudis. Let's not be overly dependent on any one channel or any one way to deliver our goods and products. So we saw a lot of this in COVID with China.
Exactly.
We were so dependent on China
Yeah.
for everything, right?
Mm-hmm.
When it came to, goods and products and retail and all this stuff, manufacturing. And COVID forced us as holy crap, that maybe not such a good
not a great
idea.
idea.
Maybe we shouldn't be buying all of our pharmaceuticals from an adversary,
Exactly.
And so I think long term that's going to work out well for us and put us in a better position.
I tell you where it hurts is Europe is in a much worse shape than us.
Yeah.
They're facing jet fuel shortages. Okay, just think they're literally facing that challenge of they're going to have to ground flights. I mean, it's a real deal to them. And this is my message to Europe if they're listening. Understand that a lot of the stuff that we're doing is helping you, right? And so all this everybody wants to stay out of conflict. I get all that, but there's also it's kind of more beneficial to them to get this thing straightened out and not to have to depend on oil from adversaries that want to rid you from the face of the earth. Mm-hmm. Maybe start pitching in a little bit and being part of that. It would get over a lot quicker if the ones that need it the most started helping.
Well said.
Yeah.
All right. Well, that's all I have for today. Coming off vacation.
Hey, World Cup. We didn't talk about the World Cup. I know you're so excited.
We were in New York City.
Oh, when that
On
happened.
Sunday afternoon. We were when what's his name from Spain took the penalty kick in there was a few minutes left in the game.
Yeah.
And he missed it. He's like the young kid from Spain. That's been famous.
He didn't. Well, yeah, I know what you're talking about.
The goalie blocked it.
Yeah. He shot on goal and he missed it. Yeah. And
we were at the top of the Empire State Building
when that happened.
And a guy had his laptop out and was watching on the laptop, and so we were all huddled around his laptop watching it. And then you could, from the top of the Empire State Building, you could hear there were obviously pockets of crowds all over the city. You could hear people going crazy when different things happened.
Oh, that's
cool. And
then
when Spain won, we were walking through the streets, and there were groups of people huddled around TVs everywhere. It would have been a lot. The fan ratio was very heavily favored to Argentina.
Right.
For sure.
Right.
It was a
You
lot
could see that
more
on TV.
Argentina fans.
Yeah.
So if Argentina would have won, it would have been complete
nuts.
chaos.
Yeah.
But it was still cool, being in New York City. The game's right across the river.
Yep.
It was kind of a cool
Hey,
experience.
this is cool. We talked about this last week about the economic impact of the World Cup on U.S. economy.
Yeah.
And it has to we don't know the numbers yet, but it has to be a windfall, obviously,
incredible.
for the U.S. I mean, it was a well run. Mm-hmm. So I've watched the World Cup since I was as long as I could remember. This was a well run, incredibly organized, great event. I mean, it was fantastic.
The game, I was going into extra
Yeah.
time and all that. It was a great way to end it.
It was. I wish the game before the day on Saturday, France played England, and that was a fun game. It was 6-4. It was almost like an exhibition game. They really weren't playing defense. They really weren't. I mean, I'm not going to say they didn't care, but it was a fun game, and both teams were having fun.
Yeah.
And it was 6-4, right? That was an exciting game as an American fan. 1-0 after 120 minutes of watching.
It's exhausting.
It's not always exciting to American fans, right? But I love the World Cup. It was a lot of fun, and
It was fun.
Spain was the deserving champion.
They
They
played
were the
well.
best team
Yeah, they were
of the
good.
whole tournament. But
For
anyway.
sure. Well, that's a good thing to end on. So, as always, we appreciate you guys watching and listening. Be sure to check out Eli's Data Brief. That comes out every 2 weeks, so go check that out. Give us a like, subscribe, shoot us an email, leave us a comment. We appreciate you guys, and we'll see you next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.